Yo, what's up guys? It's your boy Looney, and with the market pumping, everyone is looking for a opportunity and where to invest. And that's why I want to discuss United Healthcare and decide whether it is a buying opportunity, especially its massive drop recently. I'm also going to give you guys a possible substitute that I'm personally investing as well. Before we get into this, quick shout out to the Discord. It is free to join, and then I also offer a premium membership, and that gives you access to one-on-one coaching. I do trade callouts. I have an option selling course, giveaways, and more. It's $8 a month. You can check it out. The links to that are in the description. But let's get into this. So let's look at United Health. Let's actually pull it up. Right now it's at $244. It had a rough earnings call, and if you look at the earnings, it actually missed and it dropped massively, missing estimates, and its overall revenue guidance was cut drastically. And a lot of people are actually been selling off. You can see here, year to date is down 50%. It is also facing regulatory scrutiny and DOJ investigations on top of political drama tied to the ACA and the big beautiful bill cuts. There have been rumors of Buffett or Berkshire being invested into this company or starting their investment, but that is not confirmed. Now, what is my take? I'm personally not investing. And is it a buying opportunity? Possibly. But I just think the value is too high. I would want a stock where I can get 100 shares and at least have some sort of control. This price is way too high for me. And if I'm looking to just get a quick flip of 100% return or something crazy, I could see a better opportunity elsewhere. And we're actually going to get into that pretty soon. But this one is struggling. It is struggling to actually stay upwards, and we have a bull market right now, so it's actually struggling to do well in a bull market, which is pretty concerning. Now, this can turn around, and it could turn around very hard, but I don't want to bet on that. I'd rather invest into a company that I know will do well in the long term and provide that return. And also, it doesn't have to be healthcare. It could be fintech. It could be another different investment. You don't need that substitute for United Health. But let's actually give you a substitute, or at least what I'm doing that is also in the health space. And one is HIMSS, but we're not going to go over that. HIMSS is a very small position in my portfolio, about 5 shares, only taking up 0.58%. I did this during a massive dip and sort of a hedge when I was doing an option play. But we're actually going to talk about OSCR. So OSCR has gotten a lot of heat as well, especially after United Health earnings, because United Health kind of leads the way of the health industry, and when it suffers, a lot of these other companies also suffer. But I believe OSCR is a great opportunity. It requires a lot less capital. It's only $15 a share. Granted, it was $10, $12 a share, and a lot of the big analysts are confirming a sell signal, and I don't agree with that. I think that it will perform long term. Yes, there are some headwinds with the overall subsidies expiring this year, but I'm sure these will get an extension or revision. So I think this is a great opportunity. You might have missed on the best time to buy, maybe wait for a drop possibly, but this earnings, it missed and it still actually went up. And that's probably because a lot of this bad news or this bad sentiment was already priced in. And that's why, to be more on the safe side, I didn't want to go all in. I wasn't buying calls. I wasn't doing a day trade. I was selling puts. So I was selling a bunch, and I actually closed a few of them, but I had a $15 put all the way down to $10. My $15 one got assigned, and now I have 100 shares, and I could actually let my shares appreciate, and I'm already up 7%. So a lot of people might have panic sold when the stock was viciously dropping down to $13 or maybe even lower than that, but I just stayed calm, stayed patient, and double down or triple down or even quadruple down. I was selling puts aggressively, $12 all the way down to $10. Like I said, I have closed them. And now that I actually own these shares, I could also do a slight hedge, but also collect income and run a covered call. So I'm only collecting $30 on this, 33, but I could use that 33 for whatever. And it does give me that cushion for Oscar to actually appreciate. It's not too close to the money. And that's why I think Oscar is a great opportunity. It had a massive jump earlier or a couple weeks ago up to $21, and I could totally see it going back to that. I don't know when. It might be for a while, but I'm just going to overall stay patient and just keep dollar cost averaging. If it goes down more, I'm going to try and buy more. If it keeps going up, maybe I'll hold it and I'll let things play out the way they're going. But just to recap on everything, the market's pumping. There's not too many opportunities out there, but that doesn't mean you shouldn't be invested. I feel as though UNH looks a little too, the risk reward isn't worth it for me. It's a little too expensive and just overall complex right now with what is going on. So I'm personally staying away. This is not financial advice, but that's what I'm personally doing. I'm not saying it's a bad opportunity. It's just something I am just not investing into. And that's why I'm investing into Oscar. I can also use options for income or flexibility, and also less capital is at risk. So let me know what you think. Are you eyeing UNH or are you steering clear? Peace out.